Hi, I'm Jimmy. In this video, we're going to look at what's happening with the stock market and where potential opportunities could be hiding for our investments. We're going to walk through each of the 11 sectors to see how each sector is performing and ideally try to identify which sectors could be the best ones to find great investments. Okay, now before we kick this off, I just want to let everybody know about a website that we're currently building to help us research companies better and ultimately try to value stocks very quickly. So one of the best ways to value stocks is to use something like discounted free cash flow. And coming out of the gate, this is one of the main features or one of the main functions that we're going to have up on the website. And basically what we need to do is we enter the ticker of the website, and that will automatically enter analyst estimates. That will automatically pull down analyst estimates for free cash flow for that company, and then kick back the fair value of the stock using whatever our own required rate of return is. Now, we expect for the website to be up and running by the end of the second quarter of this year. But if you sign up for the website today and you want to get access to this, we do these weekly live streams where we use this exact calculator to value the stocks for the people in the community. If you want to get access to this today, if you sign up today, not only will you get access to our private investing Discord, but we're going to lock in the price. So once the website's up and running, your price will be locked in forever. It'll never go up on you. Like I said, we do 3 different live streams per week. We do the DCF one where we calculate the fair value of companies. We do the one where we're building different investment portfolios, how to manage our own portfolios, and then another one on how to research companies. Now, I will leave a link for how to sign up in the description below if you're curious. Okay, let's jump right in. So this is a chart of the S&P 500 over the past year. By the way, this scale here, this scale is the returns over the course of the year. It starts at 0% and how much were they up at any given point. This is a total return basis, so it assumes dividends are reinvested back into the stock market, in this case for the S&P 500. Now, we might notice that recently there's a big pullback in the market. And although there's been a pullback in the market, I do think it's important to point out that over the course of the year, the stock market is still up. So I just bring that out so we don't overreact to any one, let's say, one bad week in the market. Now, it is possible it keeps going lower. That's why we're looking for good opportunities. That being said, our best performing sector out of the 11 sectors that are out there is the energy sector. This sector is up over 50% for the year, which is crazy impressive considering the relative growth of the broader stock market. Now, I'm not sure we're going to find too many great investment opportunities in a sector that's as high as this one has been. So I think we might be better off moving right along. Next up, we've got the real estate sector. This is the second best performing sector. The real estate sector beat the S&P over the past year by a decent amount. Now, this probably isn't too surprising given what we know about real estate, what the real estate markets have done over the past couple of years. So I'm not too surprised that the real estate market would do this well. But again, with the fact that interest rates might go higher from the Federal Reserve, I'm not sure, move meaningfully higher by the Federal Reserve. I'm not sure that real estate's the best investment at this point. Okay, moving right along. Now let's clean this up a bit just to keep it a bit simpler to see. Next up, we've got the financial sector. Now, it's possible that we do find some good investment opportunities in the financial sector since many times financial stocks have done fairly well when the Federal Reserve increases interest rates. So I think that this could be a good place for us to start to find good investments. That being said, I think it makes sense to keep a running list of possible sectors to consider investing in over here. So financial sector is the first one over there. Okay, next up, we've got a sector that was trailing the S&P 500 for most of the year until just recently, and that is consumer staples. And we can see that during the early parts of the past trailing months, and the past few months, the consumer staples has trailed the S&P. But then when the markets got in trouble, consumer staples started to outperform, which is typically what we would expect from these types of companies. These are more defensive types of companies. Think companies like Procter & Gamble, Campbell Soup, Coca-Cola, Walmart, sort of big blue chip companies that almost no matter what the economy does, a lot of people continue to use their services and products. So this could be a sector for us to watch, to consider investing in if we think that the stock market will keep heading lower. This is traditionally a good defensive sector and could do quite well. So we'll move that one over to our potentially good sectors list. Okay, next up, we got two sectors that have ended somewhere near where the S&P were, and that is information technology and industrial stocks. Now, of course, there could be stocks within those sectors that, if we're looking for great investment opportunities, there could be a couple hiding in there, but I'm not sure those are the best sectors for us to go out and find. I haven't seen a lot of reasons to believe that those sectors could be the ones for us to search for. I think we're better off moving right along from those. And now we go to some sectors that have underperformed the market. And this is where I think a lot of opportunities could be hiding. First up, we've got the materials sector. This sector includes companies like Dow, Ecolabs, DuPont, Eastman Chemical. And it's possible that these types of companies, or this industry in general, performs fairly well if the economy struggles or the stock market struggles. Many of these stocks, first of all, pay decent dividends, but overall, this sector could do decent. So I think that this could be a good place to research and see if we can find great investment opportunities. So I want to add this to our research list. Okay, now we've got three sectors that performed right near each other over the last year from a total return basis. And all three of these could be maybes. I would start with the top three there. I think those are the three best sectors for us to start with. But then these three could be somewhat interesting if we don't find anything great in the top ones. First, we've got the healthcare sector. And I wouldn't be too surprised if there's some good opportunities there. In our private investing community, we've done the fair value of a bunch of healthcare stocks. Some of them look super overvalued. Some of them look like they could be good deals. So I think that there's probably some opportunities hiding in there. Then we've got the utility sector. Again, this is historically a fairly defensive sector. A lot of these stocks pay decent dividends. So this could be a good place to not only protect our portfolio, but perhaps we could find, with the pullback in the sector certainly over the past few weeks, maybe there could be some good opportunities there. I think we could find some real value opportunities. Okay, then we've got the communication services sector. Now, this is stocks like Disney, Alphabet, Netflix, Verizon, companies like that. And frankly, I would love a shot at some of these. This is a sector that most interests me because there's a lot of companies in there that I would love to buy. I'd love to buy a stock like, Alphabet, but I want it at the right price. I'm not willing to overpay. So if the market keeps pulling back, perhaps we get some real value opportunities. Okay, then when we switch over to a sector that has pulled back the most, well, that's consumer discretionary. And I'm sure that there are some opportunities in this sector. But from some of the research that I've done, I've found that a lot of these stocks they were way overvalued. So I think that the reason that they're down the most from a sector perspective is a lot of them are overvalued and they deserve to be pulled back a bit. So unless we have a stock that we already love in this sector, I think that there might be some other less popular opportunities that I think have potentially more upside in some of the other sectors. For me, this will be one of the last sectors that I look at because I think they were overvalued and they're getting closer to fairly valued. Now, if the stock market does really keep going lower, yeah, of course, keep looking and look everywhere. But I would start with these top three sectors. Now, of course, once we start digging into the sector and trying to research the companies within that sector, I think it's crucially important that we understand the business. That's the key. But Warren Buffett always says that the key to owning a good stock is buying a good business. We've got to be able to research that stock to see if it is a good business to buy. Now, I actually did a video called The 8 Steps to Analyze a Stock, where I walked through the process of learning a company for the first time. Where do you find the information, how to get it, what order to analyze the information that they give us. So if you're curious, perhaps that's a good next video for you to watch. Plus, if you want to sign up for the website that will also help you value stocks and research stocks, I've got a link to both of those right here. I got a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.